Needed to get my hat. Hello and welcome to Identity Office Hours, episode 35. The title today is Next Gen Open Banking and Bank ID is Beginning. Daryl and Adrian are our guests. And why don't we start with a quick round of intros. First with Daryl, since you proposed the topic.
Sure.
Daryl, we worked together previously at IDEMIA. Now you're at Ping Identity.
Sure.
What are you doing now?
Yeah, so I'm about 25 years in the business. My first job, I was the first product manager for Touch ID prior to being sold to Apple. And then over the years, I worked in all the areas, large-scale identity verification and credentialing with governments. I also did a lot of physical access control with the Coast Guard and TWIC-Card. And then I also have done a lot of commercial and online and financial services work as well. So kind of all the areas, logical, physical access, and large-scale ID, all three. And now my last job, I worked at IDEMIA. I was leading the mobile driver's license initiatives helping with Apple and the TSA checkpoint, making sure MDLs can be verified. And we built that platform out there. And then 3 years ago, I came over to Ping Identity to help lead kind of the next generation platform. And we call that NEO. And it's comprised of both identity verification as well as digital credentialing and wallets. So I'm enjoying my stay here, and we're already rolling things out, and we're excited about the future on this.
Adrian is our decentralized identity guru of the day. Adrian, tell us a little bit about your background. How did you get here?
Thanks, Mike, for the invitation. I really regret not bringing my hat, which I usually wear all the time. Forgot it today. So I'm Adrian from Berlin, and yes, I'm specializing in wallets for a decade now. Initially for the cryptocurrency wallets, but realized that identity is a much more important issue to work on, and was introduced to the concept of self-sovereign identity while living in Taiwan. And I went down the rabbit hole and really fascinated me. And since then, really worked in the industry to, together with a lot of stakeholders and the ID Union Research Consortia, which is funded by the German government. And then within the last 2 years, when the amendment of the eIDAS regulation was introduced, really specialized on that, on the European Digital Identity Wallet, and co-founded LISI. We are a software provider of organizations to implement use cases with the European Digital Identity Wallet.
Awesome. Well, so Daryl, you proposed this topic about open banking. I have to admit, when I first saw the topic, I was thinking of open banking like UK open banking or Brazil open banking, because GLUE has spent a long time implementing these standards for federation, really how you create a federation of trusted, relying parties, fintech companies, and banks. But then, Daryl, when I started reading all your homework, it really seemed like this was more of a conversation about decentralized identity. Maybe you could tell us a little bit about why what bank ID and open banking, why do you suggest this topic?
Sure. Yeah, it's really both. Really no doubt the bank ID programs in the world, like we've seen in the Nordic countries and Canada, they've proven the point that when you have a very strongly proofed identity and you issue a reusable way to authenticate that individual, you can bring fraud down significantly. And then the open banking model is, okay, now if I'm at Bank A and I want to move to Bank B or interoperate with Bank B, how can I do that elegantly and securely and be in control as an individual? And so traditional mechanisms have always been built on federation, APIs being published in federation. But we've entered a new era, and the new era is called adversarial AI. And AI now, with the attacks that we're starting to see, all of these point solutions in the sky, all these integration points in the sky with federation and APIs opens the attack surface up tremendously. AI loves those APIs and they love the federated models, right? And by introducing decentralized identity and digital wallets to perform the same functions, including open banking, as well as a strong bank ID that you can reuse at many different relying parties, it creates an environment that adversarial AI struggles with. And it's very difficult to impersonate you at that point. You really can't phish an individual. You might be able to get some data out of an individual through being a rogue verifier, let's say, pulling data out, but you can't repackage it or modify it and try to pretend to be Daryl in the DCI world. So there's a lot of great value there. Even Gartner, Forrester, Kuppinger, Cole have all indicated, these great analysts that we have in the industry, that DCI and verifiable credentials are the only transformative technologies available in identity today, increasing privacy, increasing security, and improving the user experience all simultaneously. And that's a very rare thing in any industry, to have a technology that can do all three at once, right? Usually we're trading off between those three, right? And so what we're seeing now is with the financial services market are now embracing decentralized identity and digital wallets and verifiable credentials, and they're starting to implement use cases this year, right now. And it really kind of kicked off outside the crypto world, like Adrian's been in. Crypto's been doing this for a while in a lot of ways, but outside of the crypto banks, last year, Raiffeisen Bank was really the first one to really come out and say, we're doing this. Like, we're going all in, right? And they have banks in 12 different countries across Europe, and they have to do cross-border banking. And today it's very difficult for them to enable such a thing, right? So that's the premise of our conversation today, is how this new technology approach is going to really revolutionize user experiences, security, and privacy.
Adrian, is there an overlap between bank identity and government identity? Is it just a difference of governance, really?
I think it boils down to the same thing, which is I really like the reference of the Pan-Canadian Trust Framework. They differentiate between a fundamental identity and a contextual identity. And a fundamental identity is given by the state, by event of birth, for example. And a contextual identity only exists in a certain context, for like your Twitter account or your LinkedIn account, whatsoever. As soon as you leave this context, this identity is not really valid anymore. Your handle, for example, is not resolvable, or you don't own it anymore. So I think that's something we really need to differentiate. And then there are different systems on how to enable a system to verify a fundamental identity, to really ensure that it's you as a person. How it is from the real world. And governments have different approaches for that. In Germany, we have a smart card approach that the ID card, for example, is used with an NFC chip. In the Nordic countries, we have bank ID, which are federated systems, and there are other systems as well. There is a difference in terms of what it means in the end. But I think also what Daryl mentioned, moving forward, what we see right now is that especially in Europe, things are going towards a wallet-based identification system, so that the fundamental identity lives together with other contextual identities in a wallet, user-centric, controlled by the citizen, which they can use to identify towards different services.
Yeah, Mike, sometimes banks know more about you than governments in many countries. Europe may be different, but the amount of proofing that a bank does even goes beyond many times what governments will do, right? They know about your financial history. They know about other factors, Patriot Act requirements, right? And so to Adrian's point, the government ID, digital ID in your wallet only gets you so far, right? Around core of Daryl, being Daryl. But beyond that, anything around reputation, anything around historical data that's being proofed about you, and your behavior, your behavior is not there. And sometimes governments don't care about your behavior, right? Sometimes they do. If you're a criminal, in some countries, it matters about how you get a government ID than if you're not, right? So, but in most cases, it's not. You have a core identity regardless of anything else around that, like contextually. So by having this additional layer on top of a government digital ID, in those countries where that's available, by the way, it'll be very key and helpful. Some countries, though, there is no national digital ID, and there may not be for many years to come. So for a bank to provide something in lieu of, instead of the government, it can be very valuable to reduce fraud across many different communities, right, in different market sectors. So that's what we're seeing in Europe. We hope the Europeans are going to do it with eIDAS 2.0, and we're going to have real digital IDs in the wallet. Will it be by the year 2025? Maybe. we'll see. We know the state governments in the U.S. have been struggling. They've been trying to do MDL since 2014. Mike was Iowa, right? And so it's been a long time coming. We don't know how fast they'll go, but there's going to be gaps either in the amount of identity information in the credential or the availability of such a credential, and the banks are going to be filling that gap. That's what we're seeing.
Yeah. So I wanted to push back on sort of the enthusiasm a little bit and
Sure.
be a little bit more skeptical. This solution requires a new trust model that doesn't exist today. In the old federated open banking world, we had banks who own the identities, and we had relying parties like fintechs who consume those identities or other banks. Now we're introducing a new piece of software, a wallet. And that wallet is essentially control of a key. And by the way, consumers and professionals have done a pretty bad job at being able to prevent their keys from being leaked. But we have this new piece of software. So instead of having a two-party trust model, IDP and SP, we now have a three-party trust model where we have issuer, verifier, and wallet holder, let's say, right? And just to use your TSA example, I can't present my driver's license, my Arizona driver's license, from any wallet. I can only present it from an Apple wallet. So I would argue that rather than your vision of, there's a huge attack surface area for open banking APIs, I don't think those APIs go away. What I think is that there's a new, there are more APIs probably than ever. And also, we now have to deal with this additional trust factor of this new party who's in the system. So I feel like the trust model, like open banking for me, is more about a trust model. And it feels like the trust model just got a lot more complicated.
But I think in your assumption is that the two companies are trusted, right? That's not necessarily the case. There's been rogue in situations where people have interacted and transferred data about me that I didn't control and I didn't approve, right? So yeah. All banks don't behave well. In fact, even some of the big banks misbehave. They open up mortgages in my name and they don't ask me my permission, right? So be careful on saying that the consumer, the user, is the one that should be distrusted. It might be the other way around. I need to think about my trust. Who do I trust as well? Because they're using my data. They're doing transactions on my behalf as a proxy, and I'm not involved. I'm peripheral to the transaction.
Yeah, I wasn't talking about the person, actually. I was really talking about the piece of software, the man in the middle, i.e. the wallet, or the thing that holds and protects my keys, that maybe gets backed up to Apple and Google, like how you actually back up and restore those keys. I don't know.
Adrian can talk about the EIDAS 2 model, but in that case, the government wallet is going to be provided and given to the citizen, and it falls on the government to make sure that wallet's safe and usable, right? And that model, that's pretty good. If the government's put the stamp of certification on it, I think that wallet is probably going to be trusted, right?
Adrian, maybe you could talk about some of those issues. Well, how many wallets are we going to have?
That's a super interesting question. So maybe let me give you some context first. So the eIDAS regulation itself exists since 2014, and initially they wanted to provide an easy possibility to do cross-border identity checks for government services. So that was one of the main drivers. And they recognized that its adoption was not really so successful by not integrating the private sector. And now they took a really ambitious approach, amending this regulation. So that's also the reason why it's called eIDAS 2.0, by introducing the European Digital Identity Wallet, which in the end is a software piece for a legal or a natural person to hold data which they get issued by issuers. And this data is then verifiable, so verifiable attributes, verifiable credentials, which they can present to relying parties to access digital services. And let's leave the legal wallets for legal entities out of scope for now. We talk about wallets for natural persons, for citizens. And every EU member state is required to provide such a wallet by 2027. And I don't say issue, I say provide. And they can basically have the multiple options. They either issue it themselves, they either work together with a third party who's then developing it as ordered by the government, or they open the market for private party participants to provide a wallet to the citizens, which then gets certified by the government. And we know of a lot of member states which already, considering the last option, so that they provide a certification scheme so that a private wallet provider can get a certified wallet, and this can then be used to derive the so-called PID, person identification data, the fundamental core identity of a person, into the wallet. The thing is that for now, it is not 100% clear. The thing is, obviously, the regulation itself is currently still in development, with the implementing acts currently discussed by the member states. But for now, it seems that I, as a German, won't be able to derive my core identity issued by the German government into any other wallet than provided or certified by the German government. So I would not be able to use, for example, a Belgian wallet, Czech wallet, whatsoever.
Or
so there will be,
wallet.
or no, it depends if they get certified. There will be at least 27 wallets probably. It could obviously be that one provider provides a wallet and then conforms with multiple requirements for multiple governments and has
So
one
you're
application.
telling me I have like a bunch of wallets and I have my identities sprinkled over these various applications which I forget about, and I'm somehow safer?
You don't want to distribute your identity. You have the choice. Is it to choose whatever wallet is which is available, which you then choose from, and then you would go for one application. That's kind of similar how you do it with smartphones. You don't have multiple smartphones. You choose one out of the multiple options, and then you continue with that.
But Daryl, actually, I want to pivot a little bit into consumption rather than wallets, because the wallet, we could probably talk about wallets for the rest of the show. But a lot of the value comes from the consumption of the identity, not from me being able to hold it, but what can I get by actually presenting this identity? One of the criticisms of open banking in the UK and elsewhere is that, when they look at the usage of open banking, it's like hasn't been transformational for people. Most people don't even realize in the UK what open banking is.
Yes.
So why is this more exciting, this new bank ID paradigm? Why is it more exciting for relying parties?
Yeah, because in the current model, the amount of privacy assessments and security assessments and technical integration that has to happen in a federated model, even in an API model, is extensive. And the amount of legal agreements that have to be written. And in the DCI model, you don't need all that stuff. If you decide to trust Bank of America's identity, let's say, and you want to, let's say you're Rocket Mortgage and you do mortgages for a living. And if you want to trust the credentials from Bank of America, you don't need any backend integration to do this. You don't need to have privacy assessments. You don't have to have security assessments. So you can light up your use case very fast. Right? You can validate that credential quickly and securely, and there's ways to do that, including in a DID web model. DID web is where it's actually attached to your internet domain. It's very unlikely that Bank of America is not running bankofamerica.com, right? So credential verification is very straightforward. If you want to trust that credential and consume it and use it right away as a relying party, you can do that with very little effort as far as back-end discussions, right? You can have lightweight MOUs if you want in place.
By the way, I want to push back a little bit on that too, because in the federation model, let's take InCommon, for example, in the US, the Educational Federation. They publish a list of metadata, the trusted IDPs. I don't have to be in InCommon to download that metadata aggregate and decide to trust an IDP.
Sure. But you have to sign contracts. You have to do... You as an endpoint, they're not going to just let any endpoint start talking server to server. That's not going to happen.
Okay. Now, at the point at which I want that IDP to start releasing me attributes, I probably will have to sign an agreement. And that's where the federation...
Yeah, and if you're running in the dark web, you're not going to be allowed to attach. You have to go through a privacy assessment, a security assessment before you're allowed to attach, right? So again, the point here is to empower the user to go more places faster and to light up relying parties much more quickly and still safely. And this is where Adrian can talk about his experience with crypto wallets, right? Like having smart contracts in the wallet. You could literally create legal agreements on the fly if you want, right? You can do this through the mechanisms. But the point is that they're very secure. And I love sitting down with CISOs and we start out and he sees the user experience, or he or she, and they laugh at me and they say, that can't be secure. It's too simple. There's not enough friction, And then we go do a deep dive for about an hour and a half. And at the end of the conversation with the CISO, he says, oh my God, this is so much better than OAuth. It's so much better than OpenID Connect. Why are we not doing this? Right. So I've had this conversation with Fortune 500 CISOs again and again, right? So the security mechanisms are much stronger than what we're using today. And adversarial AI is very frustrated with this new model. So it's going to change. It's going to really help us fight the AI attacks that are starting already.
So Adrian, the crypto industry doesn't exactly have the best track record of security. I think more billions of dollars were stolen in crypto than all the bank heists combined, including the sovereign bank theft. Are there lessons to be learned from the crypto space? And how does identity, where it's not just a single vector of values, but actually there's more variety of the claims that we're releasing. What are the lessons from crypto in this type of ecosystem? Are there any?
I think there are a lot of lessons we can learn from the crypto industry. I to be honest, I left the industry 5 years ago, so I don't know the last recent things. But it's interesting to see what really, like, in general, like, basic mistakes were taken, not only in the crypto industry, but also in different ecosystems around identity, where, for example, relying party authentication were not taken into consideration, that you didn't really know who's asking for information. This, I think, is still also a bit of an issue when it comes to MetaMask, for example, where you cannot really see what's kind of the data you sign. I'm not so sure about the crypto industry anymore. I'm not focusing on that. So I think that's something which we see.
I just want to interject quickly on that point of RP authentication. There's a whole new movement in OAuth right now around workload identity. And it sounds to me, and it corresponds directly also in OpenID world with relying party verification. And in fact, Tobias Looker and Paul Bastian have supported that in wallets themselves need to identify themselves. They need to have credentials. So is that what you're talking about when you say relying party identification?
We know Paul Bastian from Bundesdruckerei very well. We developed it together also with the team from Bundesdruckerei. So we actually implemented that also to see together in the Decentralized Identity Foundation to see that the wallet you're talking to as a relying party is authentic wallet and is certified as a European Digital Identity Wallet, for example. So these are all the very different trust aspects we have to take into consideration from both ends, right? As wallet speaking to the relying party, but also as a relying party speaking to a wallet application.
Yeah, trusted verifier is very important, right? And so NEO has it built in. So remember, we have 3,000 corporations globally built on Ping ecosystem. So for us to enable organizations to know about each other, that's very straightforward for us. And so every issuer in Ping 1 knows every verifier and vice versa. That's built into the model. So all the verifiers are trusted, and the wallet can talk to the verifier and make sure it's a trusted verifier. So no rogue verifiers can exist to harvest data, right? Within our network. In the future, when it goes beyond that, that's when it gets dicey, right? You got to be able to have verifier trust. And that's to your point, Mike. Relying party trust is important, right? And who's consuming the data. The good news, though, is they can't phish it. So even if you get a rogue verifier and they harvest your data, they're going to get maybe one person, two people, a few people. They're not going to get a giant breach of a database, right? It's going to be a one-by-one thing, right, over time. And then the other good news is they cannot repackage it or modify it and pretend to be Daryl and go in and do stuff on my account, right? Does that make sense what I'm saying? So that's one of the beauties of it.
I actually would like to come back to one point Daryl mentioned. He said, like, the difference of the two models of now making contracts with everybody to consume data from a relying party compared to how we envision it in the future with wallets that, as you as a relying party for a bank, for example, you need a lot of data when you want to do a mortgage or other more liability issue processes where things need to be checked, like the age, the civil status, the family composition, educational qualifications, professional licenses, public permits or licenses, financial or company data, power of attorney or mandates in general, proof of insurance, employee credentials, receipts or product warranties. All these things can be live in such a wallet application and be automatically consumed by a relying party like a bank, and then be processed without human error in between, and without having the need to connect to third parties to ensure that these documents provided are actually legitimate. So that can be built into the ecosystem as a trusted infrastructure layer, and therefore streamline a lot of processes.
Can we relate this back to banking? I'm a bank, and I'm saying I want to issue or I want to maybe have a wallet application. Most banks already have a mobile application, right?
Yeah, they can embed the wallet very easily into that.
And so I want to make this my bank mobile app becomes my bank wallet, and my bank wallet allows me to present credentials to relying parties. Adrian mentioned some relying parties that might be of interest. Like maybe I want to, get a mortgage, or in a business context, maybe a line of credit, right? But what are, what's the relying party side look like here? Like who does want my bank ID to accept my bank ID, verifiable credential today?
Again, depending on the country. Banks and their proofing method, the amount of proofing that a bank does is well known to be significant. And so the value of that credential and all the money that they've invested in that proofing experience, many times up to $120 a person, by the way, the enablement of even a retailer to now level up, right, their identity trust to a level equal to the bank is huge for them. It's huge to prevent fraud and reduce fraud. So to be able to utilize the proofing, as a reusable identity, as it were, to be able to utilize that proofing for my own services can level me up without investing the $120 a person. Right?
Are banks becoming the new ID.me? Are you familiar with ID.me's business model? Are banks becoming like for example, in Canada, SecureKey provided bank authentication to access government services. But are we saying that with verifiable credentials, banks can become almost like a identity provider service like ID.me?
Yeah, they can become a reusable identity that can be reused over and over again, right? Especially within their own community of trust, within their own community, but even outside of that. We had one bank that went to all of their corporate clients. So this is their business clients. And they said, hey, if we did this, if we created a bank ID, would you use it for your own onboarding of users? 80% of them said yes. 80% said absolutely, we would absolutely use it. We'd actually pay you money for onboarding using your bank ID. 20% surveyed said not only will we use it for onboarding, we want to use it to log in. We want to use your bank ID to log into have our users log into our account. So you can see here that the need for fraud reduction is so big right now. I don't know if you guys saw the new FinCEN report that came out recently in the US, but the amount of fraud around identity has gone through the roof. It has gone gangbusters. Certainly AI is part of that. And so there's a real need to keep the fraud down across all market sectors today. And banks can become a hub to help reduce that fraud because the amount of proofing that they do. There's a lot of value in that, right? Does that make sense, Mike?
Yeah, it does. And I think it's obvious there are a lot of people who would love to have your bank ID for onboarding. Once that identity proofing's been done, even the government, let's say. But if I could maybe pivot a little bit into some of the operational concerns, Adrian, you've been involved with actual POC. Yeah.
I think because I would also like to answer your question because I have a different opinion about it. I think it
Oh,
highly
okay.
depends on the jurisdiction. The thing is that if there is no really like an ecosystem where such like a fundamental layer of trust exists by the government, which is in the case of the US, where only there's the mobile driver license and it's not really digitized and so on, there is certainly a need for that. The question is how does this need addressed? And for example, in Europe, we had the idea to create such a system in Germany, and the German government clearly said, not going to happen. We're going to push our ID that's issued by the government, and we're not interested in reusable KYC provided by banks. And if you don't have the government which supports that idea and the regulatory environment for that, it's not going to happen. And also we saw a lot of liability topics which need to be addressed, and also the financial business model behind needs to be addressed. So that's something which is currently still to be seen how it works in the IDAS, the financial model behind it, to incentivize the issuer. And that's something which we currently don't see. So when it comes to the fundamental identity, core identity of a person in IDAS, at least, it won't be issued by banks.
Right. I agree with you, Adrian, but the German government's not going to do financial proofing on Daryl, right? That's not going to happen. So you're going to have to find a way to take the root credential from Germany and create a chain of trust to the bank, the additional proofing the bank has to do, and bind those together, right? Does that make sense what I'm saying? So, I mean, Germany government is not going to do all the proofing you need to do business as a citizen. It's never going to happen. Right.
Yeah,
I think that
they don't know your credit worth. They don't know everything about you.
Exactly.
I mean, I think what we're saying is these aren't mutually exclusive either.
Right.
You can have a German UD wallet with your national ID in it, and you might also have a bank app where they were in the bank in that case is actually a relying party of the government credential, which is hopefully based on a foundational identity, right? Mm-hmm. But then they could take that and enhance it or release different claims about you that the government doesn't know or care about.
That's right. And there's already a model, just so you know, EIDAS2 is very smart. They have the model where corporations can also issue into the same German wallet, right? For example. So you'll have to get approved, of course, by the government, but at some point your bank could also issue a cred with that difference, the delta of proofing, into the same wallet that your government ID sits in. Does that make sense, Mike? So that's actually accommodated for in the model in the EU, for example, right?
Yeah. Go ahead, Adrian.
It's a totally valid point. The thing is, what I felt is like bank ID, it has this kind of digital identity character, and that's kind of what people have like a misconception of. We're not talking about the fundamental identity. We're talking about rich data about the financial viability of a person.
Sure. Yeah. Again, it's going to be jurisdiction by jurisdiction, no doubt.
In Nigeria, Glue serves the Nigerian. It's called NIBS. It's a banking association, and they issue to each person who has a bank account this thing called the BVN, the banking verification number.
Yeah.
And then that's used to correlate you, I guess, so they know if you open different accounts. So that's what they're thinking of bank ID there. So you have a foundational identity, and you use that maybe to get a government identity, and then you use that to get a bank identity, and that banking identity maybe is more reusable across banks because it has additional information rather than just your proofing. I don't know.
Yeah, but I think identity graphs are going to be a thing. The key though is in that graph, how privacy centric is it? How secure is it? Is that association going to behave badly in the future? Right. So identity graphs are absolutely going to be a thing, and in our mind and here at Ping, we expect both reputational graphs and identity graphs to be built, but it has to be done the right way. It can't be a de facto national ID in the sky or a de facto central thing in the sky that knows everything, right? That's not acceptable. So as long as they haven't done that, Mike, I think it's fine to have an association being a hub of activity, as long as they implement it safely and securely and privacy enhancing, right? Do I really want somebody to know all the banks I bank at? I don't know. Maybe it's okay. I'm not sure. Right. Right.
And so that's actually sort of the direction that I was going was these, especially numeric identifiers tend to be correlated across in ways that we don't like. And so we're trying to move to more privacy protecting areas. And wallets potentially offer this. Maybe, Adrian, you can speak to some of the advantages of a system based on wallets for helping us to protect our privacy.
Yeah, I think there are multiple facets of it, of which things are, which is actually observable by the user and which is hidden below the surface, which a user never really understands or really has a touch point to. Maybe begin with the more obvious things. I think what we currently have is that that identity is organization centric. So for us as citizens, we have identities in multiple facets, and it's for us really difficult to have like a transparency of what's happening, what data did I share with whom. If I have a central application where this is like recorded, where I have a history of interactions, for example, with whom I shared what kind of data, and even have the option to execute data protection rights, like the right to be forgotten, as Article 16 and 17 of the GDPR, the General Data Protection Regulation in Europe states, then this gives more control and with that also privacy to the user. And there are also then more hidden aspects of it that we, for example, can use zero knowledge proofs to say that only a statement about a person is right. For example, that an income is above a certain level, so that my landlord doesn't need to know if I earn 50,000 or 250,000 per year if I want to rent a flat. That we can use selective disclosure, that we have, for example, a set of attributes of a credential, but instead of showing all the 10 credentials of the credential attributes of a credential, I only show 2, 3, or 4 of them, depending on the use case and the requirements of the use case. And also about that a issuer, for example, doesn't know when I use a credential at a relying party. When the relying party is required to request the issuer, is this actually a valid credential, and ask the issuer about it, then the issuer will always know to a certain extent that the credential has been used. And that's obviously something we want to avoid in the ecosystem. And that's also something which we implemented with a security by design approach within the eIDAS regulation.
Yep.
I don't know, Daryl, any thoughts on the privacy implications here? So is the user the right person to control that selectively? Or we had mentioned ideas about the issuer might only want to release certain information about users to certain relying parties. Have we now delegated that to the user? And are most users actually qualified to even really make that decision?
Well, that's a good question. I think, there's still just like there's scopes with OpenID Connect, there's also schemas in a credential, right? And so the goal is to make those schemas standardized. And we're actually starting that effort, by the way, in a couple different market sectors already. And so eventually you're going to have standardized schemas that are published out. And that can help drive the verifier side of things, right? So then the verifier should only be asking for the things that it should ask for based on, for example, standards, right? But I think that the human person in the middle probably will, in some cases, there'll be situations where you might want a proxy. Maybe we'll have a personal AI assistant, right, as part of our experience that will help us to make those decisions, right? And I'm sure that will be able to go check schemas and check the right things that you should be doing and alert us and say, yeah, Daryl, you probably shouldn't give this to this particular loan company because they're asking for way too much, right? So I envision a day when there's a personal AI assistant that will help us with that.
Yeah. When I think about the kind of applications that I might use my bank to log into, like, sure, I log into my bank with my mobile app and my bank website, but when do I want to use my bank ID to log into a third party? Maybe when I'm using my tax preparation or accounting software, that might need access to my bank account, or some fintech application that maybe is going to give me a consolidated view of that. But I wonder if this is something that, I don't know, is this something that banks really need? Or it seems like their first party use cases are so challenging right now because, to be honest, most banks do a pretty crap job of authenticating people. My bank's still using SMS. So should my bank be thinking about third-party authentication when they can't even get first-party authentication right?
No, that's a good point, Mike. And the good news is it also solves their first party purposes, right? So you can self-consume the credential and create user experiences you could never make before. It's usernameless, it's passwordless, right? And so part of the discussions, of course, with our customers is to solve tactical problems too, not just look at the future and open banking and be able to have a bank ID. So I don't know if that answers your question, but of course they want to solve their own problems also, not just third-party issues, right? But it's really the identity proofing that they do that's the secret sauce in this. That they do a lot of work to know that Daryl really is Daryl, right? And that has value to these other organizations because they can't spend the money that a bank spends, right, to make sure it's really Daryl. Does that make sense?
Actually, these cases are the ones which create frequency, or which will have high frequency when it comes to the wallet, because I don't do an identification, a KYC process 10 times a year when you're in a bank. However, you authenticate payments and transactions and logins all the time from users.
Exactly.
And that's actually also one of the reasons why the strong customer authentication process is also mandated within the IDAS regulation. So banks, as well as other organizations which are required by national or union law to do a strong customer authentication, need to support the European Digital Identity Wallet.
Yeah.
And we're currently exactly defining these kind of flows within the European Wallet Consortia, together in a working group led by Visa and other financial stakeholders, where we take a look at the flows and help banks to connect their customer authentication modules, enable them to speak with the wallet. So that's exactly what we're currently also having as a pilot program with us, with the company, to providing this kind of Lissi connector service for them and enabling to access to this kind of new world of wallets.
This reminds me a little bit of passkeys in the early days, where first passkey was always like the key was on the USB fob. It was pretty simple. But then we moved it to the device. Then now the private key is on the device. And now a vendor like Apple comes in and they're like, well, I want the device. I want them to have an Apple Watch, and I want them to have a tablet and a laptop and a phone, and I want all those devices to have the wallet, or FIDO credential, passkey, call it whatever you want, right? Are we facing is wallet sort of in this sort of embryonic phase right now, where have we thought about things like recovery or how we get this wallet onto multiple devices? And do we lose some of the properties of strong authentication when does it become one factor instead of two factor when we start duplicating this wallet on multiple devices?
Yeah, no, I think that's a good point. And Adrian can get more of the technical aspects, but with a verifiable credential, yes, there's a private key involved and a public key involved that's wallet-centric or device-centric. But there's also another key, which is the issuer of the credential, the signing key. And so the encryption is usually done by the public key of the wallet, and the issuer's private key is done to sign the data, right? And together, you create this multi-combo security package, as it were, that can't be compromised by only one key being found. For example, you have to go steal both keys, Mike, right? You got to go find the issuer's key and the HSM at the bank, which is going to be hard. And you're also going to have to steal the key, a private key of the wallet, right? So
each credential is specific to a wallet. We don't have multi-credential, multi-device credentials, which is sort of annoying for me as a consumer, because it means if I get an Apple Watch, I don't have that bank credential. I'm going to have to go through that flow.
You do, but it's signed with different keys. That's all. It's the same data inside.
But I might have to go through another enrollment process in order to get that on my...
No, you just have to pair your wallet. There has to be a pairing process, cryptographic pairing with the wallet, right?
It depends. It depends, because some credentials might be hard. It depends if the wallet is an edge wallet, which only lives on the smartphone, which uses the secure element, for example, or hardware secure elements, or if it's a cloud wallet, which you then enables you synchronization.
Thank you for bringing that out. Yeah. That's federated identity, actually.
Not quite.
And And the others doesn't specify if wallet implementation needs to be on an edge wallet
Okay.
or can be a cloud wallet.
Then
So
this is just
both
a
are
new,
options.
once we say it's on the cloud, then it's just a new interface for federated identity that gives you some new capabilities. Um, but it's still federated because I'm using some type of authentication to get to my cloud wallet. That's just called a federated wallet.
Yeah,
So
but
then
you
you
don't,
lose all of those advantages of like decentralized that Daryl's talking about.
not
I would
necessarily.
say so.
Cryptographically, it's still much stronger, right?
Yeah, there's more things you can do with it.
Yeah.
But
But remember,
you know
Windows
what?
will probably, Mike, Windows will probably have a wallet. The next version of Windows will probably have a wallet, right? So you're going to have wallets in places that on these devices, and you're going to want to manage those and where the data goes. But I don't think the wallet is the magic. The wallet's a storage container. I think the
Yeah.
magic is the verifiable credential, the data inside, and how it's used and how it's moved, and having consent built in. Right? It's a new world.
Right. Well, so we're trying to keep these roughly on time. I'm going to go to Adrian first for last thoughts. We couldn't nearly cover it all, but Adrian, maybe some last word takeaways or last thoughts?
I think it always is not boils down to a single application. It is also always an ecosystem perspective, and we need to take a look at the different perspective, the different angles of the stakeholders, and make sure that the solution itself has a holistic meaning and not be bound to also like a single application, like a wallet, but have a bigger picture.
Daryl, any last thoughts? I mean, we just scratched the surface, but
Yeah, no, I think the important message here is that the train has left the station and banks are putting wallets inside of apps. The work is being done. And you may not even know you have a wallet in your app in the early days, but it's going to give you new user experiences, consent built in, and it's going to allow you to have more trust in the transaction because you're involved in the transaction and the movement of the data. So I think that's the big message. The train's left the station. The key is figuring out, is it a threat to you or is it an opportunity?
yeah, and it's one area where we've seen a lot of innovation and lots of great new OpenID standards. And I mean, for my takeaway on this is that it's going to happen. It's not like an if, but it's a when. But I think that there are a lot of gaps right now that need to be addressed, both from what Eve would say is the BLT, the business legal technical, the trust, and also the culture. I would throw in the culture. We have a culture that understands how to use passwords in mobile apps and SMS, and we need to train them on something different or to provide more metaphors. But okay, well, we're over time. Next episode, one of Glue's partners, longtime partners, BioID, is going to tell you how they're combating deepfake for facial recognition, server-side facial recognition. This is a moving target. We had a great episode on this previously, but this just isn't going to stop deepfakes. And anyway, it'll be a fun episode. And thank you, Daryl, for suggesting the topic.
Yeah, it was good. Thank you, Mike, for your time, and thank you, Adrian.
Likewise.
Yeah, thanks,
Thank you very
Adrian, for volunteering and helping us understand the European perspective a little better. And thanks, audience, and we will see you next time.